Hey, good afternoon. Want to catch up with everybody for a quick market minute. So the Fed did actually end up cutting interest rates, and actually a little bit more than what anybody expected. So the Fed did a 0.5 point cut back in September. And what we saw happen shortly thereafter is the market ticked up quite a bit. And we hit some new all-time highs. So does that mean that we're in for smooth sailing? Well, not necessarily. It also means that things are becoming less restrictive. So we'll see how this plays out. Remember, we do have an election, and while election years don't really affect the market, going into the election, we tend to see a decent amount of volatility. And I think we're seeing that right now. There's some concerns around strikes that are going to happen, it looks like, at the ports of entry for the United States. But all in all, the economy seems to be going at a good pace, and the consumer is still healthy. And when we look at earnings growth, the projections are also very good there. So we would expect the market to continue to grow from here, albeit with a little bit of volatility. Also, I think it's important to note that historically speaking, when the Fed cuts interest rates, the market usually drops within the first 6 months. And while that may not happen this time, it's just something for us to keep note of. Now remember, most election years tend to be positive. So I would expect that following the election, we'll see the market continue upward, if we follow history at all. While the Magnificent Seven, the 7 companies that have pretty much driven all of this year's market returns, have slowed down, and we've even seen a little bit of a pullback off of their highs. There are a lot of other opportunities out there. We're starting to see more diversification across the board. We're starting to see people take money into other companies outside of those companies. So again, that's all good signs for the market overall, and I think for more of the long-term outlook of the market. But we'll continue to watch it. We'll continue to look at opportunities. We'll continue to take advantage of things as we can. The main thing is as the Fed continues to cut rates, we would expect them to cut somewhere between 1 point to 1.5 points over the next 12 months. And so what that means is a lot of the fixed income assets that we've been using will reduce their payouts. A lot of the money markets and stuff like that we've been depending on those risk-free rate of returns, those are going to go down. And the old adage is don't fight the Fed. And when the Fed is reducing rates, they're encouraging you to take on risk. And so we'll start to look for where those opportunities are to reallocate some of those assets that we've had in those fixed income assets. In the meantime, if you need anything, you have any questions about your account, don't hesitate to reach out to us. We're here to help you. We appreciate your trust, and we look forward to talking to you soon. Have a great afternoon.